now. Can you guys hear me now? Oh, there we go. Sorry about that. Okay. Don't worry, no one missed anything important. Yeah, so bottom line is, ignore everything, even the action yesterday, light volumes, going into tomorrow's announcement. That's obviously everything. Corporate action, nothing to really report for the day. Spike, can you hand me one of those cups, please, right? We had CFR that had earnings out this morning. It's definitely looking a little bit better than expected. Definitely had a miss out of Asia, but the rest of the Europe numbers were quite spectacular. Excuse me. So all in all, I think a good number out of CFR. Definitely expect them to open up a bit today. Excuse me. Sorry about that. Okay. So, in terms of market data today, not a whole lot to really pay attention to. Like we said, the big numbers coming out tomorrow, so I think you can shake off anything that happens between now and then. Not going to be a big market driver. I can't see anything really standing in the way of what's going to happen tomorrow. We've got UK jobless claims change, ILO unemployment, CPI out of the Eurozone, mortgage apps in the States. We've got local retail sales. That's actually something, probably the most important thing to pay attention to here locally. CPI month on month in the States, and then crude oil inventories later as well. Okay, let's get into the maps. Okay, first thing we're going to look at this morning, we mentioned a second ago, U.S. bond market. It's above 220. You can see here. Definitely a bit of a level. I mean, that really works if you kind of move all the way across to here as well. So it's been a real inflection point of late. You can see here yesterday's moves back above 220, really strong, and that's coming right before the Fed announcement. So I think this is very, very important. Just, you know, there may be a few late stage bets, guys taking risk off that were planning for no rate hike, or guys that are actually, you know, making an outsized bet that there could be a rate hike coming. It could be telling you either one, but bottom line is that it's definitely the odds are starting to raise in favor of hike here. Next thing we're going to look at is we're going to look at all the major indexes here real quickly. This first, S&P 500. So you can look at it. If you want to draw it from the wicks, then we're still kind of in the consolidation here of the narrowing triangle. I would probably look at it like that, which means we've broken out already in the S&P, but let's just look at it like this for the time being. And what I wanted to point out is this is really important. So we had this big sell-off here globally going into a very important announcement, obviously, tomorrow. And you know, a lot of people, they call this this kind of pattern, they call it the coil. You know, when you get into a little narrowing wedge, especially going into something as significant of an announcement, we're going to have a big move one way or another. That goes without saying. So just keep that in mind. You can look here at the S&P 500. We've got a little coil going there. You can look here on the German DAX. Let's draw it from if you draw it from the close, so it encompasses more like that. Then also looking like a coil, the FTSE, same thing. You know, this is they're all really looking like coiled springs here, about to make a move one way or another in size. And the more I really think about it, and the more I look at things, you know, the more I kind of start to think that, you know, this is actually a complete formality, and that it's going to be something that's out of the way for the markets, and especially if we get a rate hike. I mean, I think that maybe shake markets very initially, and then from there, I wouldn't be surprised if we traded really well after that, because it's kind of out of the way. You know, the Fed's going to come with a really dovish statement, and that's kind of the result I'm hoping for. If that's what happens, and we do raise, I'm actually probably going to be looking personally to buy some of these golds. The reason, and some of the emerging market currencies, the reason why is because same sort of thing here. You also got a little bit of a coil going here. It's the Anglo Gold. But what's important about this is simply that we've sold off emerging market currencies and commodities to such an extent over the past 2 years, and the whole reason what we've been selling has been because the Fed was going to hike rates. The Fed is going to hike rates, and it's just continued to go and continued to go and continued to go. It may be one of the most overplayed stories ever in the history of markets that I can remember. And so I think it's going to be the classic selling the rumor buying the news story with the emerging market currencies and with gold, for instance, that it's out the way. We know that it's going to be a very slow pattern thereafter, and then in turn being very bullish for the two. So also watch the things obviously like the U.S. dollar rand, potentially coming all the way down here to maybe fill the gap at about 1260 if we do get a rate hike. I genuinely believe that that's a possibility. Now, last thing I'm going to look at this morning is Kumba. We'll look at this on the 30-minute. This is going to be a trickier one over the next couple of days because remember, this has come out the index, but it's not as simple as that. You've got the index trackers versus the ARBs to see who's going to be bigger. We definitely popped up out of a little bit of a bull flag in Kumba yesterday to kind of take us up a couple cents below our highest close of the last month, or call it last 15-20 days. And I think that very easily can make a move quickly to 100 plus here over the next couple sessions. That's it for today, guys. Good luck out there.